Saudi Arabia's public investment VC arm took a very interesting PR step of listing their funds that they have backed, and it's a significant list. Everybody from Andreessen Horowitz to Coatue, not surprising there. And Mark Andreessen and Ben Horowitz and Adam Newman had a major keynote at a Saudi startup conference. I was actually asked to keynote the next one in Riyadh, which I'm debating doing. And then in sync with that happening, at the same time, there's been a debate of should LPs in America be backing firms like Sequoia China, Matrix China, et cetera, because those firms are now backing OpenAI competitors, for obvious reasons.
Look, Saudi Arabia, Abu Dhabi, all of the UAE, these are countries that are really important on the world stage, and increasingly so because they manage peace and prosperity regionally now, right? They have huge balance sheets that can accelerate all kinds of projects all around the world. And so they have to be taken seriously. And so this is a very smart marketing move by the PIF, which is to essentially say, look, we are an established blue chip LP of the blue chip organizations that you're used to hearing about and celebrating. And I think that's very smart of them, because what it does is it reinforces the feedback loop that other great firms should be going to them to raise capital when it comes time for them to raise their N+ first fund. And so I suspect, especially now, it makes even more sense because everything we've heard, Friedberg mentioned it a couple of episodes ago, the United States limited partner market is essentially closed for business. They have huge misallocation problems. The endowments are sort of closed. The universities are closed. A lot of the family offices are licking their wounds. And so this is a perfect time for folks in Saudi Arabia and the UAE to basically put the foot on the gas and basically tell everybody, hey, we are open for business. So I think that makes a lot of sense. And I think that it'll be successful. It'll work, especially in a moment now where US dollar flows from US dollar limited partners are very difficult and harder to come by.
Well, and we're also selling billions of dollars in weapons to the kingdom. And we are a major partner of theirs.
They're a valuable security partner of the United States. They're a valuable economic partner of the United States. It's no different than doing business with any other country. I think it's smart by the PIF. On the other thing, though, with US firms investing in China's AI, it should not be allowed. And I do think that the folks that are responsible for CFIUS need to get a handle on this. Look, I've done a bunch of deals where I have had to jump through a bunch of CFIUS hoops where...
Explain CFIUS, please.
So basically, CFIUS is the Committee on Foreign Investment in the United States. Now, what that means is if folks want to invest in certain things that are on a list of things, and I'll tell you the things that I've been involved with that came under CFIUS, rocketry and certain chip technologies are so advanced that the United States has very specific rules that limit the ability for foreign actors to invest in those businesses. And in those situations where a few folks invested beside me in some of these companies, we had to go through a process to get CFIUS approval before that investment was allowed. Now, what's interesting about that is that's about money coming in. But I do think that the reverse now becomes important, because if US dollars are going to go and seed these extremely complicated advanced technologies abroad, especially into the hands of countries that are frenemies at best of the United States, I think we have a responsibility to have a point of view on that. And so I think Keith Raboy was the one that was very definitive and said this should not be allowed. I do think it is so early. Jason, we talked about this. We're on this curve of fuck around and find out, which means there will be some crazy examples of stuff that are very uncomfortable.
Yep.
I don't think we want US fingerprints on this stuff being perfected outside of US borders.
Sachs, when we look at the history of engagement with China, maybe we can take a multi-decade globalization perspective here. When you look back on it, the engagement with China created so much prosperity, so much intertwined dependency, iPhones being the best example possibly. We're selling them in China. We're making them in China. China loses Apple as a customer. That would be absolutely devastating for them, and it would obviously be devastating for Apple as well. So when we look back on that as a general rubric here, do you think we enabled a competitor, or we avoided future conflict because of the interdependency? And where do you sit in terms of thinking about engagement versus maybe isolation or something in between those two, frenemies, best of frenemies, et cetera?
The policy of constructive engagement, as it was called 20-something years ago, the idea behind it was that if we engaged with China economically and helped make them rich, then that they would become more like us. They would somehow turn into a democracy and they would have tremendous gratitude towards us and we'd become friends. It's not the way it worked out. There were people who warned that this was a foolish approach. So most notably, the realist scholar John Mearsheimer at the University of Chicago warned back in 2002 that that was not the way this was going to play out. If we made China rich, they would seek to convert that wealth into political power, and then they would act the way that all other great powers have behaved throughout human history, which is they want to dominate their region, and they would seek to push the United States out of Asia. And the future that he predicted 20 years ago is the future that's come true. And I think all the constructive engagers, I think, have some egg on their face. Now, I understand where they're coming from. This is a fundamental difference between whether you see the world in economic terms, which is about creating positive sum games, basically trade, or whether you see the world fundamentally in geopolitical terms, which is about the balance of power, which is more of a zero-sum game. And I think that both views, they're both extremely important. We want to engage in positive sum relationships that generate more trade and more wealth for the United States. At the same time, we have to be aware and concerned about the balance of power. We do not want a number two country in the world who can rival the United States in terms of power, who basically could win a security competition with us. And we certainly don't want a country in the world to be more powerful than us. So I think this is sort of the yin and the yang, is geopolitics versus economics. And I think what's happened with China over the last several years is it's flipped. I think we used to see the relationship primarily in positive sum economic terms, and now we see it in geopolitical terms. And I think there's a lot of firms now in the United States who haven't embraced this new reality. And to go back to your question about, when should a venture capital firm take money from a foreign country and when it shouldn't, I think there's a very simple rule for this, which is if the country is a U.S. ally, I think it's fair game because the U.S. has said this is a partner of ours, so why can't you do business with them? But if the United States government has said this is an adversary, you're putting yourself in a really difficult, precarious spot by doing business with them.
Because then you have to explain yourself to the U.S. government, yeah.
This is the very simple rule we would use: is we would never consider taking money from Russia or
North
China,
Korea,
any country that the U.S. government says is an adversary of ours. But if the U.S. government says this is a partner and an ally, then I think you can consider it.
Do you think there's a way, Sachs, to salvage the relationship with China and make it productive? Or do you think it's a far-gone conclusion at this point? Because one might argue, and I've heard people argue this, maybe China would have invaded Taiwan already if it wasn't for the interdependency. So I know we're dealing with, we're doing a lot of predictions here, but do you think it can be salvaged? And do you think it would have been a worse relationship if we hadn't had this interdependency that's been built up?
I'm not quite sure that the economic interdependence theory preventing war has been definitively proven. If you go back to World War I, for example, it was the case that Britain and Germany actually were each other's number one trading partners, and they still got in World War I for reasons that in hindsight seem really silly. So I'm not sure that economic interdependence can prevent, it certainly doesn't prevent security competitions from arising, and therefore I don't think it can necessarily prevent a war. Although, having business ties can lead to positive interactions.
Yes.
So I'm just saying the jury's still out on that theory.
Okay.
But I think that, like I said, I think once you're in a security competition, the way that we are with China, I think geopolitics rather than economics is in the driver's seat.